All right, so get this. What if I told you that the biggest edge in trading today isn't some super secret algorithm or a $10,000 course, but something you probably scroll past 100 times a day? Seriously, it's hiding in plain sight. Are you tired of feeling like you're always one step behind the market, reacting to price swings instead of anticipating them? Do you ever wonder how some traders just went to make a move, almost like they have a crystal ball? Well, spoiler alert, they don't have a crystal ball, but they're using something incredibly powerful. In this video, I'm going to break down exactly how you can transform everyday news feeds into your personal trading superpower. We're talking about turning information overload into actionable insights that could genuinely revolutionize your trading results. Forget the complicated charts for a second. We're diving deep into how real-time alerts, sentiment analysis, economic calendars, social media, and even expert opinions, when used correctly, can give you a massive advantage. This isn't just theory. I'm going to show you practical ways to integrate these tools so you can stop guessing and start making more informed, strategic trades. And trust me, you're going to want to stick around for this one, because by the end, you'll understand how to filter the noise, spot opportunities before the crowd, and potentially avoid those gut-wrenching losses that come from being caught off guard. We're going to cover 5 crucial ways news feeds can make you a smarter, more proactive trader. So grab a coffee, or don't, save the money, and let's get into it. This could be the information that changes your entire approach to the markets. Let's kick things off with real-time alerts. Imagine a major company announces unexpected earnings. These are market-moving events with real-time alerts. You're not waiting for the evening news. You're getting the raw information almost instantaneously. If a stock you're watching has a news catalyst, wouldn't you want to know first? This is about leveraging publicly available information faster. Setting these up is usually straightforward. Most brokerage platforms offer news alert systems. There are also dedicated financial news services. You can set alerts for specific stocks or keywords, customize it to avoid irrelevant noise, react quickly to news. Good news might influence your strategy. Bad news might lead you to cut losses. It gives you a crucial moment to act. It helps you understand market movements, connect the dots between news and price changes, learn what impacts prices and what's noise, develop your market intuition. Don't blindly trade on every alert. Speed is an advantage, but it doesn't replace analysis. An alert is a signal to investigate further. Explore the alert features on your trading platform. Let's talk about sentiment analysis. Ever wished you could know how the market feels about a stock? Sentiment analysis quantifies this, scanning news, social media, and reports. It gauges emotional tone, positive, negative, or neutral. Extreme sentiment can be a contrarian indicator. Use it with your technical and fundamental analysis. Explore sentiment analysis tools for deeper insights. Every serious trader should check the economic calendar daily. Trading without it is like driving at night with your headlights off. Eventually you'll hit something unexpected. An economic calendar lists events that can move markets, things like inflation reports, employment numbers, and interest rate decisions. These data points show the health of an economy. Strong data can boost markets, weak data can send them tumbling. It's crucial to compare actual numbers to forecasts. A beat or miss can trigger significant volatility. Use the calendar to know when market-moving events are scheduled. Plan your trades around these events. Avoid high-impact releases if you're risk-averse, or be extra alert if you trade around news. Adjust your strategy for volatility. Some trade the immediate reaction, others wait for trends. The calendar is your starting point. It helps you build a bigger picture view of the market, connect macroeconomic trends to your trades. Most financial news websites offer free economic calendars. Filter by country, impact, and category. Start using an economic calendar today. Now, let's talk about a source of information that many people dismiss as just noise, but can actually be a goldmine if you know how to use its social media feeds. I'm talking Twitter, Reddit, stock twits, even certain YouTube channels or Discord communities. Yes, there's a lot of garbage out there, a lot of hype, a lot of FUD, but there's also real actionable alpha if you can sift through it. Think about it. Social media is often where news breaks first, even before traditional outlets pick it up. Eyewitness accounts, leaked information, or even just rapid-fire discussion among knowledgeable traders can give you an edge. The speed of information dissemination on platforms like Twitter is unparalleled. For traders, this speed can translate into opportunity if you're quick and discerning. The key here is curation and critical thinking. You can't just follow everyone and believe everything you read. You need to build a curated list of reliable sources. These could be reputable financial journalists, experienced traders who share their insights, analysts from respected firms, or even official company accounts that might drop news. One of the powerful aspects of social media is its ability to capture grassroots sentiment. While sentiment analysis tools often incorporate social media, you can also get a qualitative feel by directly observing discussions. Are people genuinely excited about a new product a company just teased on Twitter? Is there widespread panic on a Reddit investing forum about a particular stock? This can give you clues that broader sentiment indicators might miss or be slow to pick up. However, the dangers are obvious. Pump and dump schemes are rampant. Unverified rumors can spread like wildfire, causing massive, unwarranted price swings. You have to be incredibly skeptical and always cross-reference information with other, more reliable sources before making any trading decisions. If something sounds too good to be true on social media, it almost certainly is. So, how do you effectively use social media for trading insights? First, be very selective about who you follow. Finally, let's talk about expert opinions. We're bombarded with them all the time. Analysts on financial TV, writers in major publications, newsletters from seasoned market commentators. Leveraging these expert analyses can be incredibly beneficial, giving you a broader perspective and insights you might not have developed on your own. But, and this is a big but, you have to approach them correctly. The value of expert opinions isn't to blindly follow their recommendations. If it were that easy, everyone who subscribed to a newsletter would be rich, and we know that's not the case. Instead, think of expert opinions as another data point in your own analytical process. They can help you understand the bull case or the bear case for a particular asset, highlight risks or opportunities you hadn't considered, or introduce you to new investment themes. A good analyst or commentator will do deep research, look at fundamentals, consider macroeconomic factors, and articulate a clear thesis. Reading or listening to their reasoning can be very educational. You can learn how they think about markets, what metrics they prioritize, and how they connect different pieces of information. This can help you refine your own analytical skills over time. It's like having a mentor, even if you've never met them. When evaluating expert opinions, consider the source. Do they have a track record? Are they transparent about their methodology and any potential conflicts of interest? Are they known for a particular bias? Understanding these things helps you put their opinions in context. No single expert is right all the time, so it's often wise to seek out a range of opinions, especially those that challenge your own views. One of the biggest mistakes traders make is guru chasing, latching onto one expert and following their every call without question. This is dangerous because it outsources your thinking and your responsibility. If a trade based on a guru's call goes wrong, who's to blame? Ultimately, it's your capital on the line, so you need to own your decisions. Experts provide information and perspective. They don't provide guarantees. So there you have it. 5 powerful ways you can leverage news feeds to seriously up your trading game. We've covered getting ahead with real-time alerts, decoding market mood with sentiment analysis, planning around volatility with economic calendars, finding hidden gems in social media, and using expert opinions to sharpen your own insights. It's not about having a crystal ball. It's about using the information that's already out there, but using it smarter, faster, and more strategically than the average trader. If you found any of this valuable, and I really hope you did, do me a huge favor and absolutely smash that like button for the YouTube algorithm. It costs you nothing and it helps the channel out a ton. And of course, if you want more content like this, breaking down trading and investing strategies in a no-nonsense way, make sure you subscribe and hit that notification bell so you don't miss out on future videos. Got questions or your own tips for using news feeds? Drop a comment below. I read pretty much all of them. Remember, mastering the flow of information is a continuous journey, not a destination. The markets are always evolving, and so should your approach to gathering and interpreting intelligence. But by implementing these strategies, you're building a more robust, informed, and proactive trading framework. As the saying goes, an investment in knowledge pays the best interest. So keep learning, keep refining, and go make those informed trades. Thanks for watching, and I'll see you in the next one.